3 key rules to trading price action. A very good evening to you traders. This is Mark. Welcome to your daily trading video. This is actually a second video I've done. I did one before, but I was going on and on and on and on about price action and tape reading. And you know what? That's because it is my strategy. It's the way I approach the market. If you didn't realize, my stock picking or my market calls are at best 50-50, and that is why I do not trade just based on hunch. It's just not, I just don't feel it's a positive expectancy strategy, so I just don't do it. Yes, you have a bias and a thesis, but then you start to see how price responds to that thesis. So the first step is, what is your line in the sand? Where is your line in the sand? And let's use Amazon today. Everyone expecting Amazon to blow out, and it happens to be down. It's actually lifted up a little bit now. Again, this is what it's all about, price response. But it was down at 750, and it shocked everybody because it missed earnings. Just yesterday in the video, I said everyone expected it to blow out, but it didn't happen. I'll tell you what a better example is. Let's look at pound US dollar. Okay. So first things first is you start to draw a line in the sand, and you start to say, number one, what is a good level that I'm looking at? Now that may be a prior high, that may be a resistance level, it may be a moving average. This is where you can integrate your own strategy into price action. So you have your level, okay? So that is, again, you're looking at, if you're intraday trading, it's going to be a high, prior low, today's high, today's low, a key level from resistance or support. So something that's very important, an interesting level that everyone's watching us first. And the second one is, what is the price response to that level? This is the biggest key thing ever. What happens to price? Does it go slamming down to support, hold straight away and bounce off? Does it go slamming through the support, hold below, and then get lower? If you have a positive news coming out at this point as it pushes up and then comes back and turns through, how important is that? That's very important. If you have a nothing news release, spikes up, spikes down, spikes up, spikes down, is that important? It's the response to a key level, which is why tape reading is almost useless when you're looking at it just at no key level, because it makes no sense. You have to see how the response is to something that is important to that stock, to that market, whatever it may be, currency pair, whatever. And then the third thing is quantifying the risk and framing a trade around that. So it's not good enough just to say, okay, well, I think it's weak because it's broken through a level. You have to be able to have a point where you can quantify a risk and say, okay, well, my thesis is it's weak. Why is my thesis that? My thesis is that because it's holding below a key level. Okay, so where's my stop going to be? Well, for that premise not to be correct, the market will have pushed back above that key level. Okay, my stop's there, my entry's here, my risk is X, and then I can work a trade around that. So, and whatever that may be, whether you're trading a breakout trade on a pullback, whether you're trading a pullback, from a range, whatever it may be, a multitude of strategies. Those are the 3 key things. And actually, when you look back at the textbooks and you read lots of articles and you read and you study this kind of thing, a lot of the great traders are using this. They may not call themselves price action or tape readers. They may have a separate strategy completely they've developed. But ultimately, nearly all of them, I think, are adding this kind of review and this kind of assessment into the trades they're doing. Even some of the algos, if you look at some of the predatory algos that go out there looking for big funds moving big amounts of stock about, they will probe the market. They will put a little order in and see what price response to that is. If that order gets taken immediately, they will sniff again and keep probing and just see what the response is. This is how the market moves, and this is how you can get a clue as to the potentially the next move in the market. So I could go on and on about this, and I've just literally just touched on this topic, but I just thought it was important because after yesterday talking about the Nasdaq and it's strong and look at all the strength in the stocks, this is not market. These are not market calls. They're a case of, okay, recognizing it. Now let's see what happens when we get a great response like Amazon, you get a surprise earnings that misses, price goes down. Now we're in a case of, okay, level one's passed, there's a level, there's some action. What is the response to that? If Amazon starts trading back above 800, 810, whatever it may be tomorrow, then pretty much we can all say that it's a strong price response, and then you can maybe frame a trade from that. And it doesn't necessarily be Amazon, it could be anything. It could be pound, US dollar, we're saying it's weak, could be yen, currency pair, anything. It's all the same kind of game. Anyway guys, a little bit of a different video tonight, but I thought it'd be quite interesting. Anyway, because I like tape reading, I like price action, and some of the great traders that I've studied have been into it too. Anyway, had a great trading day today guys, take care.